Good day. Ira Epstein of Linn Associates with your financial market wrap-up for this Tuesday, the 13th of August, 2019. And we're literally about a minute after 5 p.m. Central Daylight Time, so we're already into Wednesday's trade session. These are not the settlement prices behind me. They are in the grain markets that you've got there. They were in the Brent, and until we get some trades up in the Bitcoin, those are where they settled. But the other markets, well, they're showing you where they're at. Now, the event of the day, and it was an event, is President Trump in one of his impromptu, as you know, he gets for his helicopters or whatever, decided that today was when he was going to tell us that the tariffs that were all supposed to go into place on the remaining $300 billion of Chinese goods, well, it's not that simple. So some goods are never going to be a tariff on them. He decided that health goods, national security, things of that nature. He then decided to look at Christmas. Yeah, Christmas. And that's a major, major retail event for the people that shop per se. I mean, stores sometimes make 40% of their year in that. Small mom and pop stores count on it. And now to put on a tariff on certain goods September 1st that you need for that period of time is the thinking going. I don't know that that's accurate or not. First of all, I don't know how many of those goods are already in America. But that's the thinking. So why put the tax on just now? He'll move it to December 15th. Interesting day. So it's not right here. We're August 12th, December 15th. It sort of gives China more time to negotiate on a group of it, but to just keep them honest. He also is going to have a September 1st date for a different group. And those groups will be in my newsletter tonight that I send out to all my commentary and my written subscription people. I've already got them, and I read through it, and I'll let you figure it out from there. You would think, oh, Apple, if some of their stuff is going to be December 15th, well, what the heck? Doesn't work that way. Some of the stuff that you absolutely buy is September 1st. Other stuff is December 15th. I don't get the logic, but that's not my job. I'm just telling you what's going on. So when the president came out and said that, we had a risk-on environment hit. Immediately, the gold market gets hit about $30 from its high, maybe $40. It made new highs on the move, let go. Silver let go, back to the downside. The dollar took off upwards, and the Japanese yen went downwards on the news, big. We, at the same time, had the bonds and notes sell-off. Remember, when they rally, yields are falling. When they break, yields are actually rising. So we went from around 163, 164 to 17, and I'll probably be a little better than that tonight. On the energy, I looked at the API numbers that come out at 3:30 p.m. Central Daylight Time. They were a big build, 6 million net. There's nothing friendly in that. I was surprised the market didn't drop more than it did when the number came out. So in the S&P, if you look at a weekly chart, where are you? Look at the 18-week moving average in red. You're fighting your battle at the line in the sand. That's where you're at. When you take a look at a daily chart, you had an outside day to the upside. This dot here is not a speck. It's not a little flea on it. That is the price right now. When we take a look at what the market did, we have a pattern of higher lows. I can make an argument lower highs. Don't you see that? So I'll stay with the higher lows, and I'm going to give you a higher high because the high today, I'm going to come to today, was 29.44. 25. If I come to this past high, it was 29.40.75. So I'm going to say, nah, I'll abandon that. Higher lows and a higher high. That's the first time that we've seen since this big break where the market's thrown out that signal. A signal where the swing line has turned bullish. The caveat is if you take out today's low, and I want to go back to the outside day up, today being Tuesday, 28.66.75. Either on Wednesday or Thursday, this becomes a bull trap instantly as far as I'm concerned, and the market could have more downside. What about the upside? Well, one of the things we were looking at was the 100-day average. You are still fighting at that number. If you exceed it, maybe you can get to the 18-day. I think I've said that since the 200-day held, that this would become the first target. Now the second is there. Is the market capable of just getting up there and closing over the 18-day average and turning bullish again? It certainly is. It's happened before. This could have been the break. You don't know. And that's going to be the issue. We don't quite know yet. When we look at Bollinger Bands, you had spent several days under that, got to the right-hand side, played at the 100-day average coming up. Momentum up. So here's what we have. We have a bias down market because prices are still under the 18-day average of closes. Momentum is up, not dramatically so, but climbing higher. And the market is fighting a battle at the 100-day average of closes. In the NASDAQ, you have the same pattern, the outside day to the upside. You see that? The objective, if you clear the 100-day average, which it did, is the next objective would be that, 77.94. You got to 77.89, didn't quite get there. Now the number drops because, remember, the math here. You're using the last 18 settlements and you're dropping one back there, replacing it wherever the live price is now. So the resistance comes in right through there. Again, you held the 200-day, momentum up, bias down. You don't want to take out the lows of Tuesday. If you come to the Dow, we didn't make it back again to this number, the 200-day, and all we're doing is fighting at the 100, and we've hit that 100 now 4 or 5 business days in a row and seem to be stuck right there. If you can clear it, maybe the 18-day average is the resistance point. In fact, it is the resistance point on all three as far as I'm concerned. What I don't want to see is the lows now of Tuesday taken out. And yes, I realize it's Tuesday, but we're in Wednesday's trade. Then we get to the Russell. It too has the 100-day average as resistance. And this one, if we look, while I gave you this benefit, it's wrong. This is still lower highs with higher lows. Do you see what I'm getting at there? You didn't make a higher high up here, but I wanted you to see how this could look. And now you're bringing in the chart action like this. You've got the lower highs, you have the higher lows, and what's the momentum? It's flat as can be. Nothing is turned friendly in this chart. In the VIX, I'll be surprised tomorrow if the market holds tonight that we don't make a run for this 18-day average. And as I said, I think the traders that sold all the way back here on the trying to catch the premium back to the 18-day average have a losing position no matter what. I would expect them to cover if they can. On this big break today, they may have done it. Not every idea works that traders get. That includes moi. But I still look that over time, selling the first challenge of a Bollinger Band often leads to the 18-day average in the VIX. The more conservative play is selling the puts. Why? Because getting from a 12 number down to a 10 is a lot different than getting from a 20 or 15 number up to a 23. Got it? Upside's very riskier, happens quicker. Breaking from a low number to a further low number in a historic proportion, hard to do. In the bond market, higher lows, higher highs, but what you've done is you've rotated to the right-hand side. Very quietly, if you take a look, you've got both numbers over 80 today. Both numbers in the slow stochastic were over 80 yesterday. Both over that on, well, that's Monday. So here's Tuesday. This is tonight's, and that's where it gets confusing. Let's just use Tuesday, Monday, day before. You're not embedded yet. That's what I want you to see. Tomorrow is a key day for this market. It can convert itself from being oversold to locking into that bull trend, which portends then that support comes into the market on breaks. So tomorrow's going to be a key day in this market. You're not getting that in the 10-year note at all. The 10-year note is just an overbought market that suddenly the market's got a pattern of lower highs with the outside day down today and higher lows. So a pause. One part coming up, the other dropping down. And the market just pausing here is, I think it's got to work off in some manner this overbought condition. Prices either get through today's highs immediately and both numbers jump over 80 and they begin a 3-day process of trying to stay over 80, or you drift here and both these numbers drop down on that and get away from being overbought, getting back under the 70 level. TLT, the market is still staying at the upper Bollinger Band. It is seeing it as resistance. It still has its embedded reading. So this market, much stronger than the 10-year note, more in the family of the 30-year bond. Then looking at the dollar index, how many days? 1, 2, 3, 4, 5, 6, 7. Week and a half of, if you tried to sell for the break, there's no follow through. If you bought over the 18-day average, no follow through to the upside. But today's action was a big outside day to the upside. And it captured most of the range of these past 7 days. Will there be follow through is going to be the key. If there is, because the market came into an oversold pattern, it can surprise you to the upside. Another thing to remember in currencies, especially in August, they trade differently has been my experience. And I don't have much, only 5 decades. And I've been trading currency futures literally. They were my most exciting thing to look at when they first came on the scene. So I've been at them a long time, studying them, watching them, and getting to know them. And I'm always nervous in August because I consider the A-League traders around the world, they're finishing up their vacations with their family. So you get crazy moves, crazier than normal. That's my experience, doesn't mean I'm right. In the eurocurrency, right back to the 18-day average, not trending. The market's looking for direction right here. British pound, still a bear market in the sense lower highs, lower lows. It still has the fully embedded bearish reading. Is the market going to make a run at the lower Bollinger Band? There's word of parity if the Brits decide to go the route of a hard Brexit. There's also talk, I'm countering this evenly, that the Parliament, when it gets back in September, is going to block Mr. Johnson from doing that. How, I don't know. Legal fights back and forth. This is August. There's a long way to go on it, but this market's got some issues. In the end, this is how you looked coming in. This is what a tariff does in one day, the word that you're removing part of it. 126-point drop. And where's the market? Probably close, very close to that 18-day average of closes. You don't know these things are coming, and if you think you're smart enough, you do. Come on. How did you know the president was going to say he's going to remove some tariffs? Bitcoin. I said on Bitcoin that you got to be careful here. This market acts like a market that might want to get back to the 18-day average of closes. In my morning updates, I know I've been saying that in the morning subscriber video, and you can see what it's done. There's nothing super bearish about this. You're in a corrective mode. You made a new high, you're correcting, pulling back into a support area. Now, we might have gotten a little too cheap yesterday when we got down to this 372 level in the differential of Brent to WTI crude. It's making up about, nearly, $1 of that now overall, but it's still overall where the EIA said it might be. And we have the EIA, actually it was the IEA, I've got that wrong, the International Energy Agency. And they were saying that they thought the differential was going to be this year, at the latter part of the year, $4 to $5. They look very right on what they predicted. Now let's take a look at the market today. This is how you looked coming in. What do you think the idea of removal of a tariff might do? Well, obviously, energy demand. Boy, the U.S. and China, they might be bearing the hatchet. You go up to the 18-day average of closes, and magically again, at that line in the sand, you stopped in that zone, and that's what I look for, and now you're neutral in this market. October WTI didn't. It was able, and this is how it looked coming in. This was the close Monday. The news carried the market up. Now, does it get enough weakness to get back to that number? You are not trending in any of these markets right now. Gasoline, I'm looking for the resistance at the 18-day average of closes. Got a good shot of hitting it right now. Natural gas, 18-day average. So you haven't changed the story. What you did is you had a jolt from our president, who jolts us all the time with what he's doing. Now, one of the tools I use, and I've got to tell you, I don't remember not using this once I found them. And I'm not talking 10 or 20 years. I've got to go back with these people, maybe to their inception. And it's research based on seasonality of markets. And there is a seasonality. You know, we get big sales of items at Christmas. Do you disagree? Think of how the retailers do. You're a farmer. You got planting, then you got harvesting. You're a miner. There are certain things that you're doing. Seasonality, believe it or not, in the financial markets is the governments need money, take money out of systems, and so on. They talk about all this in their special reports, but then they have a chart system that allows you to look at bull and bear years on a 5, 15, and 30-year basis. They also put out these trades have won 100% of the time, 90% of the time, 80% of the time. Once it out of a 15-year period doesn't win, if it loses more than 3 years out of a 15-year period, I believe they drop the trade and they're looking at other things with it. That won't come back in till it becomes, again, one of those type of trades for their criteria. There's a caveat. What worked in the past has no guarantee of working in the future. It's another tool, no more than that. If you use it any differently, and if you read their information they put out, they're the first to tell you that you don't use these dates on their own. You use them, if you're going to use them as a tool, in conjunction with many other parts. It could be moving averages. It can be other parts to it. It's a tool, folks. And the worst thing is when people get these services and they just say, well, this has worked all the time. I'm going to take a shot at it and buy the market. You're hearing from me? No. But in any case, if you'd like to see what they have, www.iraepstein.com. You'll see our carousel of free offers. Choose what you want. You can always call my staff. We'll give you a 2-week trial to it. And I'm Ira Epstein. You have a good day.